So I want to go over some markets, and it's important that you understand what I'm doing. It's not for like subscribers or anything like that. I don't really care about all that. What I'm doing is part of a daily routine, and this allows me to be, to have a daily routine where I do a trend review. Trend review is extremely important, and I believe it's the foundation of good trading, to review these trends and be in touch with your market. And I recommend whoever's watching this video, the point is not to listen to what I have to say or learn charts or whatever. The point is for you to go up and do something similar, no matter what system you're using, so that you learn from market trends. I have this line that's kind of funny. I say, a trend is a terrible thing to waste. Because the past repeats. It really does. And these trends are recursive, meaning you have the minor, the intermediate, the major, the primary, and they're all built within each other. So, like, a mind is a terrible thing to waste, which is a commercial I saw a long time ago. It used to come on television, where they had like 2 eggs and they were frying. A trend is a terrible thing to waste, meaning just learn from it, because the behavior in the supply and demand behavior in the trend will repeat again and again on all the different time frames. And anyway, so let's go to the markets. I'll cover maybe the ags. And right now I'm taking a look at the point figure at the bottom of the screen, and you see corn. Now, take a good look at corn, and I see a base that is building, and this is becoming very, very interesting. Initially it tried to break, but it went right back down to test. So what I want to do is take a look at it on the other charts, and just get a feel for it. See what it's up to. So can I detect anything off of this? Not on that one. Let's take a look at the higher time frame. The higher time frame, I'm not sure if this is a spring, because this is in a downtrend. But there was like high, low, and all that, and then there was heavy volume that came in, and a light volume bounce. Is that a spring, and does it mean that as the market went lower, it didn't find any volume? I don't know. But this is very interesting. Let's take a look at the daily. The daily chart. What was it again? Corn. Whatever. Wow, that really is a strong price volume thrust. Let's see if I have my indicator on it. Can't even find it. All right. this is meaningful. Someone is defending the low. Okay? Someone is defending this low. This the highest volume in 1, 2, 3, 4. It's probably since August 10th. The highest volume since August 10th. So this is the highest volume about 2 months. So this is the highest volume in about 2 months. So what happened? Obviously this big bar defended this level. This level is about 344. 344, and price went back down to it, and there's someone defended it, or some group or whoever. They're defending this with heavy volume, so there's definitely buying going on. But the question is, is that, will other traders jump on board to push it higher? Right now the trend is still down. A lot of people are going to see this what do they call that? Wedge? Bull wedge or something like that, and seeing if the market breaks out of this wedge. This is the descending something. I don't really use patterns, but the point is you have some type of rally and you have an extended consolidation, and this right here, that high volume spring, had follow through. So it's not a one bar wonder. You had follow through over here on that, where I put the red arrow. So it had a follow through day, and now I think we're gonna take a look at the contraction and see if it breaks out. That is important, very, very important. So keep your eye on this market, because there's a lot of juice building up. A lot of potential in this area. So you don't know if this is really accumulation. They could have bought a lot, and then when it comes down, buy some more, down, bring it back down, buy some more, bring it back down, buy some more, bring it back down, buy some more, until there's no more left, and then they're going to mark it up. So that is very important. Let's take a look at soybeans. Can't tell from that. Looks bearish. Trend is down. This trend is definitely down. It went all the way down. Someone defended it, tested, but I don't really see any ability to rally at this time. And on the lower time frame, it's just going down. There's been a strong down wave. See if it has follow through. On the figure chart, what's going on? Figure chart off of the base of 9. I'm looking at the wrong chart. I'm looking at sugar at the top, so something wasn't feeling right. So let's go to the right charts. ZS. Alright, now here we go. So basically on the lower time frame it's pulling back, but on the higher time frame it's in an uptrend. On the lower time frame it's correcting the rally that it had. So there was a rally, pulled back, rally. This is in an uptrend. very clear I'm getting a buy signal on this pullback to the 975, around the 970, around 975 area. There was failure also, which failure I really think is some type of test, but it's different. You know, you may have heard of low volume tests, but another way the CM or the CO, how they test the market is by attempting to sell a lot and seeing if the market absorbs those orders or if price goes lower. If it absorbs those orders, that means someone's accumulating it. If it goes lower, then supply is outdoing demand, and what you see here is that failure, that effort reward, that accumulation, that absorption, whatever you want to call it, where supply failed and rallied. So this is really important. Over here on their base, I don't know what the base is, but if I take it from the extreme low, it, you know, we're not there yet, but I say around 1,015. Let's take a look. I always get it wrong by a point. Always happens. See that? It's really 12. So I have to draw it. Oh. Let's see. That's 12. Anyway, so it's about 1,017, 1,015 in that area. So there might be a pullback here, which is cool, but look, you know, what are they going to do? Nothing. Nothing at all. Nothing at all. So a higher time frame bullish, small time frame bearish, but that's because it's pulling back, and on the figure chart you still have more potential. In fact, what you had was a breakout it's also what Evans called jump over the creek. There it is, the jump. There's other jumps, like over here where the breakout is. Yeah, it's a jump over the creek. That was the initial one. Right here. This arrow is such a pain. Alright, right there, that was the initial jump over the creek. And then this here was the coming back to the creek. And now you had another jump over the creek. You had a base and a jump over the creek. Right over there. It's funny, right? This arrow. Anyway, so now you're in corrective behavior. What is the volume saying? I mean, at the top it climaxed up here. That's ending action. But that's just for the wave. It's not for the trend. Alright, so it just rallied. There was, you know, now you have your rotation back down to test, and that's where you check to see if buyers are going to step in or not. You know, if they're going to step in, great. If they're not, it's going to go right back within the range, and you'll have to go lower to find where support is. So anyway, that's what's going on with soybeans. The next market is wheat. Wheat. This market looks like it's in trouble. I mean, it's going back to a support area. You know, it rallied, found selling, Right here is a little bit interesting. Why does it do that? Anyway, right here it's getting interesting. Like, what exactly is going on in this area right here? Is supply drying up? Because typically this is a sign that either supply or demand is done. So we'll see what happens here, but clearly it's in a downtrend, so let's not even consider long opportunity. And over here what you see is, as the price went up, this is a very bullish, very meant to say bearish. Right up here there were two low volume tests followed by high volume. See that? Two low volume tests followed by high volume. The way you interpret that is that there was basically lack of demand followed by an increase in supply. Again, that double test over there means that it's testing and retesting and there's no demand left, and then the high volume after that with follow through is indicating that supply realizes that there's no demand and enters. Alright, right up there. So now you have price going down, and someone, realizing it's at a low, they might try to come in here, but I really don't know. I'd say it's still bearish because the trend is down on both the higher and the lower, and it's just a question of whether the support is going to be broken, and if so, where is it going to be broken. And even this weak counter trend rally, it went where it's supposed to go, which is this high volume area right up here. This is the supply zone. A lot of forex traders call it, they use this term supply zone, demand zone. Well, this is how it looks on this type of chart. So all it did was test the supply zone, and that's where it reversed. So what is there a count over here? I'm not really sure. It's not really very boxy, but let's see. Whoa. I'm not really sure yet, but we'll find out. If it's bearish and the redistribution began here, then you have a count of about 10, I think. 9 to 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. About 10, but it could be a bigger deal. Still, I wouldn't go short or long this market, although I'm more on the short side because it still hasn't broken support. And when markets do that, they tend to just like totally flip the picture. You know what I mean? Because there's stop runs that have to occur, and strong hands. They want to make sure they sell to you before going down. So there could be a lot of things that happen. Same thing in corn. Like if you take a look what happened in corn was also interesting, is that this was a false breakdown, aka potential spring. I'm not really sure, but right there's your spring of the range. Now for it to be a true spring, it needs to have follow through, and then you can get in on the retest of the spring. But I don't really have a clue yet because there's just not enough evidence. The cause is building. There are signs of accumulation. People say, where are the signs of accumulation? I think this high volume brick right here is a sign that there's and this right here, see this? That entire area, high volume, high volume, high volume, high volume. What the hell are they doing in here? What are they doing in here? So this is why something's going on. I just don't know what it is until the market shows its hand, but eventually it will. Anyway, real lesson today is forget this analysis and do your own. Don't follow people. Don't, like, go. There's a course. There's an SMI course, Wyckoff SMI. And then part of that, what you want to do is you want to practice trading, and you want to do your own trend review. So you make it a daily routine to review the markets that you trade while paying attention and learning by paying attention to the price and the volume and possibly the time. Alright, take care, bye.